Hello, everybody, and welcome to another Friday webinar. I'm here with Carlin from Morningstar. Chris, maybe I'll let you introduce yourself.
Sure, thank you. Thanks, Henry. So I'm Carlin with Morningstar. I've been with Morningstar just over 4 years. I'm head of data products, redistributive solutions, and alliances for Asia. So from Japan to Pakistan. Look after the data business.
Yes.
My interest in digital tokens came from when a colleague who was working on a different business had introduced me to someone in Israel who was working in a securitization company, Securities. I think you're familiar with them.
Yes.
And then from there, I stumbled into, I would say, a wormhole.
Yes.
But a very interesting one where I kind of saw the future where I think everything's going digital. So I've met with over 10 companies in this space on digital assets alone, and then also talked to companies in the crypto space, exchanges, issuers as well. Yes. So the whole gamut.
No, very exciting.
And been in Hong Kong 14 years, and prior Sydney and New York.
No, very exciting. Well, thanks for coming on this webinar. For those of you who don't know me, I am Henry Chong, and I'm the CEO of Fusang. And Fusang builds financial infrastructure for digital assets, which is why I'm so excited to talk to you today, Chris. And of course, we run the Fusang Exchange, which is Asia's first stock exchange that can list and trade digital securities. And maybe that's somewhere to start because, you know, I guess the cryptocurrency world, right, the whole world of blockchain-based assets, really till date has been dominated by what I call crypto native assets, things like Bitcoin and Ethereum, which are very exciting, and also lots and lots of ICOs, which are perhaps even more exciting still. But really what I wanted to talk about today are digital securities. And, you know, there are really, I guess, two kinds. There are what I might call security tokens. So where the digital token itself purports to be the asset in some way, and is linked to some kind of underlying value or takes reference from an underlying asset or is backed by an underlying paper asset, which I think we can talk about in a bit, and actual sort of digital securities themselves, where the digital token is the share certificate or is the only legal representation of the asset, which is actually what I'm most interested in, because to me, that has to be the ultimate promise of this space. Surely the whole point of blockchain-based assets was always that we could move traditional assets onto blockchains. But maybe if we could kick off by talking about Fatburger, because I know that you were involved in the project to get that rated. They issued an Ethereum-based bond, I believe.
Yes.
Could you maybe just tell us a bit more about that project?
Sure. So, so just clearly, I had no personal involvement in this. So Morningstar has a credit ratings business and acquired another one called DBRS, based out of Toronto. And they rated 2 bonds for Fatburger, each around $20 million. The ratings themselves weren't that great. I mean, they were BB and B. But it was the first time that bond itself had been rated, and that bond was going to only trade in the digital space on Ethereum. So, so it was interesting in the sense that there was other parties involved. So there was a securitization partner called Cadence that took the paper instrument, securitized or digitized that asset. And then they managed in what they call the waterfall. So the payments of that bond into the Ethereum wallets. So it's post paper security. It's a digital world for this instrument. So the process itself, my colleagues told me that it was faster because they had quicker access to the information. And there was great fanfare and reception for the instrument being digital, but not so much because of the ratings of the bonds. The ultimate ratings of them. And so I think if you look at that, I think that's where we are now. And we're probably getting close to that tipping point. So I think still we're in an area where paper instruments will be the underlying, and those paper instruments will still be behind the digital assets or digital tokens. And so, as you mentioned before, maybe soon we'll get to a point where we only live in that digital space, where those assets are purely digital.
And was there an underlying paper instrument for the back?
Yep. So the two bonds are actual paper instruments. So those were created, as by the issuer. Sure. And then we rated those paper instruments. The securitization company then packaged that into a digital instrument, and it's all managed through the Ethereum blockchain.
Sure, but do the holders of the digital tokens have the same rights as the underlying bondholder?
Yes. So you still represent yourself as a holder of the bond. You still receive your coupon payment, and that is managed through that digital space. And that was the waterfall payments that they talked about into the Ethereum wallets.
Okay. And how, in terms of actually rating that instrument, how did that differ from just rating a paper-based bond? Was there any
there was no, and it's very important, there's no advantage or disadvantage into the rating of the instrument, because you're actually rating the stability of the company to pay the coupon for the length of time of the bond. So I would say in that sense, it doesn't, being a digital asset doesn't affect the rating positive or negative. And I think that's important because that will be true when you go purely digital. It did give quicker access because all the information was on the blockchain. So it gave quicker access to the information that was required by our analysts to rate the company and then rate the security itself. But they're still rating the paper security.
Yes, of course.
So it doesn't. It helps with the, I guess, the timeliness. That's an advantage. But it won't help with the rating. It's neutral in that respect.
And do you also look at the digital token itself? Are there anything to do with looking and making sure that it works the way it's intended? You get involved in that side?
Well, and I think that's a good question. So I think following the instruments that have been issued and seeing if they behave for the investor in the same way. So I think I want to say that there's a lot of distrust or maybe apprehension in the industry from the retail environment. Where do people really understand, if I own that digital security, am I going to be treated the same way as if I own the paper bond? But that's something we don't know yet. It's so far so good, but we have to, I think, give it more time and have more instruments to see if that's the case. So in that sense, the market itself will give the rating if people have confidence in it.
But why do you think there's that extra layer of distrust, so to speak? If you say that the underlying instrument really is the same, as you say, you're rating the underlying asset, why do people have that nervousness, I guess? Is it because they don't trust the token form, like they don't understand how the technology works?
It's new, yes. They don't understand how the technology works. If I dial it back a little bit and take away just the fat burger layer, that is a completed project, and I look at the market itself, I'd say you don't have a lot of trust in the industry. And it's not really directed at digital assets, but you read headlines where people lose millions from a hack, and the Twitter hack from a couple of weeks ago. And what happens if that targeted your digital account? And that was you that lost that money. So I'm not talking about people who really study the space, but that mass retail needs to adopt this in order for it to be public. So if we remove just the Fatburger instrument and you look at what's going on now, where we do see ICOs coming out in Hong Kong, we're definitely flourishing in that market. So if those investors are protected in the long term and actually have those instruments behave the same way the paper instrument does, and there's no risk of fraud or malfeasance or hacking even, then I think you'll find slow adoption. And it might be generational as well. There might be a generation, maybe 65 or older, that just never bothers with it unless they have to. And then you might see a younger generation that's grown up with a cell phone that doesn't give it 2 seconds. I think it's automatic.
I actually think it's not entirely fair to say that older people won't adopt technology. They may not at first, but I actually think, to me, e-commerce is a great parallel. I remember when my parents would refuse to buy things online with a credit card. They thought it was black magic. And they're like, how do I mail someone a check? And now you're happily tapping away on Amazon.
Yeah.
So it takes a little longer, I think, to adopt, but once it becomes a new normal, it's just what you do, right?
So when you're talking about an e-commerce transaction, you're purchasing even the TV being sent to your home, and you know, of course, quarantine has forced a lot of this on a lot of people now. But if I think about that transaction, a few $100s, $1,000, a few $1,000s even, but if I'm talking about my life savings, my retirement, or my only source of income, you might have longer term adoption, but again, those people are going to require a great amount of trust. Look what happens to any politician in the US. If they say they're going to touch Social Security, they will lose their next election, guaranteed. So I think there's an element of, I'll come around. And now I think quarantine's forced that, a lot of that online commerce. But I think there's an element of, you know, maybe I'll come around to it, but it's you know, the importance in their life, whether or not they'll adopt. I don't think it's impossible, and I don't think it's a, you know, it's not a broad brush that everyone falls under.
Well, like I said, to me, I guess an analogy is literally like electronic trading of shares. I also remember when you know, I grew up in Singapore, and Singapore had only 1 hour a day where there was the electronic trading session, right, separate from the paper trading session. And most people said the same thing. I don't trust this electronic trading because it's my life savings. And now it's just how it is, right? You know, systems are digital and electronic, like it or not.
And I think when it goes to what people, how many assets they have, how much you're willing to put into this medium. If you're worth 5 million, if you're worth 50 million, if you're worth 500,000, you know, the relationship that you're comfortable with, are you comfortable having that relationship with your money only via your phone or computer? But if you're worth 5 million, maybe you have that private banker, or maybe you have that high net worth advisor. If you're worth 50 million, I think you probably have someone. And that may be electronically that you communicate with them. And it may sit in a custodian in a digital world, but you're not fussed about it. So online trading is an interesting one, because if you think about how long ago that started, to get to the point that we're at now, it was a long time. So if you're an older generation now that's relying on, say, revolving CDs for your income, plus, you know, government Social Security, you may not ever get to that space. But if you're someone in my category, you're certainly not young, then you probably will be okay. I think once it's proven to you that the risk of loss isn't as high as it seems from the outside looking in.
No, absolutely. And you know, I think you mentioned before we started filming, asking about when paper instruments, paper shares are going to move to digital, which I think is a fascinating question. You know, Fusang ourselves, we've digitized all of our equity. And so this is not a digital token that maps to a paper share somewhere. For us, the digital token is the digital share certificate. Now, of course, this is number one, right? And obviously, it's a long way away from who knows when exactly mass adoption happens. But part of the reason why we wanted to do it for ourselves is to show that it could be done. And maybe it's just worth talking about that a little bit for the audience, because I hear a lot where people say, what do you mean paper share? Isn't everything all magically digital anyway? And I say, well, number one, in some countries like Hong Kong, you really do have physical paper shares. I don't think a lot of people realize. But even in countries where you don't have physical paper, you know, you have a PDF, right? And to a technologist, that's still paper. Right? It's not a machine manipulable or intelligible string of data. It's a picture file.
That's
right?
exactly
I think that's
right.
something that's important to highlight, that as much as you can log into the Robinhoods of the world and make trades through a digital interface, the underlying infrastructure is still very much paper-based, I would say, right? In the sense that it's not a digital instrument natively.
No, and I agree. And I think you're setting the example. And I think it's going to be fascinating to watch. I think if you're successful and you bring other companies into your exchange in the same format, that would be very telling to me. That would be telling me that all parties have to be in on this. So the issuer, the company itself,
yes,
like a better word, the underwriter, those companies will have to come in, and everyone will have to agree to that.
Yes,
digital representation. And I do agree. I think people feel like when they trade electronically, they're in the digital world.
Yes,
but there is still a paper mechanism behind it. And
I don't think most people appreciate just how much machinery there is that goes into when you press that button and buy a trade, what has to happen.
Oh, exactly. And I think if you look at the fund world in Hong Kong, I mean, the fax is still required.
Yes.
So there's a long way to go.
Yeah.
And I think it's interesting. I think what you're doing is fascinating. And I think what that will demonstrate to the world is it can be done. It's 100% digital world that, that string of characters that makes no sense to the naked eye will actually represent something tangible. And that will be extremely important for the world. When we look at other assets that want to come into that space. And then we need the transparency. So what I would say is, it's great that Fusang's doing this with its share. But if Fusang wanted people to make the value investment, they need to see your income statement, your balance sheet. All that can be electronic, but they want to see what's behind this. And that doesn't have to be paper world at all. That could all be electronic form. And so that transparency behind, that's where I saw the market lacking. Some of the ICOs that I watched, a company here in Hong Kong put out earlier, they're very good at talking about the price and the benefits that you would get as a shareholder. But there wasn't a lot of insight into what you were investing in, and some of it didn't make a lot of sense. Like, one was a natural gas project in India, and it's a fantastic project. The 30,000 foot view, it makes a lot of sense. But they were asking for $40 million of what would have to be $1 to $2 billion minimum least investment. So what is your 40 million in tokens representing? And that part, when that transparency is broken down and then given to the investor, that's when I think we'll see people starting to accept, those who do their homework, people who invest in, what you were talking about earlier. I won't say scheme, but that offer, they're not doing their homework.
Well, I find that fascinating because, let's talk about this YAM DeFi project that's going on right now, where I feel like there are so many things that on the face of it, again, with or without a rating, you look at that and say, it seems a bit too good to be true. And yet people don't really seem to care. And, I think we're quite aligned in the sense that Fusang's belief is that if we can take real world assets and turn them into digital assets, meaning if I can take, such as our company shares, and have them become represented in digital form, but to answer your question of what are you getting, is you're getting a share. Same as if you bought a share in India with a paper-based version, same shares that I get as a founder, same shares that our institutional investors get, it's just a share. And at least with our institutional investors and our regulators, I feel like that gives them a lot of clarity. They say, hey, you tell me to share, like, okay, I have rules around how these things work. As long as you follow them, I don't really mind how your backend technology works. And I think that where it gets a bit more complicated is when you have securities, digital securities that aren't a share, they're not a bond, they're not a fund unit, they're a other. Right? And that's when it gets a bit more complex, as you say.
And if you think like in the traditional instruments, so fund, ETF, equity, fixed income product, even a structured project, and you think about a product where the more complex it gets, you're adding a complex product into what to an outside investor will already be a complex world. Then I think there's a lot of investor education that needs to be done. So people need to understand what market they're entering into and how they'll be compensated for that. So you're telling your investors that you're receiving a share, it'll behave just like a share. And I think that's great.
Behave is a share.
It's a share, right?
Because I hear that a lot. I hear people saying, oh, this is an equity token. And I say, is it equity? He said, oh, well, not technically equity. It's a derivative, right? Where it's linked to equity somehow, backed by company equity somehow.
Well, and that's a good distinction. So there I go. I made that same that same disqualifier. But But it is. So you're actually saying this is a share. It's going to be a share. It will have all the characteristics of a share because it is a share.
Yes.
And I think that will demonstrate to somebody. Now, I think if you say, okay, we're introducing a ETF product, but it's going to be backed by, it's going to have derivatives and it's going to have a kicker and all this, well then what am I investing in? But I would ask that in the paper world.
Yes, exactly.
So I think the other thing too is there's the sense of getting rich quick.
Yeah.
I find troubling in that sense, because I think when you saw what happened with Bitcoin and it climbed up and then dropped quite fast in both directions. And so people are looking for a way to do it again.
Yes.
So the YAM that you mentioned,
yes,
I think there's a risk of falling prey to that. So as long as the world stays sane,
yes,
and presents everything transparently, the same.
Yes.
You follow the same regulations. Those regulations are there for a reason.
Yeah.
There's no reason this, the digital space can't take off.
Exactly.
And I do think it will take off. I think what we're all trying to guess is what the tipping point is.
Yes.
When do we stop issuing paper instruments full stop?
Yeah.
And everything is written in the digital world, monitored digitally.
Yes.
Transacted, custodian, all of that done on a digital basis.
Absolutely. I mean, my belief is that there needs to be test cases, right? We need to be able to show people that, hey, there are digital instruments that just represent real underlying assets, that it's the same as if it were paper-based. What you said earlier, I think really struck me, which is you should look at these things, like whether it's paper or digital representations, it shouldn't make a difference in terms of what the asset is, in terms of your questions around what am I getting? Is it a good investment, right? Do I understand the underlying company? And it blows my mind actually that in the crypto space, people buy tokens without knowing any of those questions, right? What am I getting really? What is the underlying project? How am I going to make money? All these questions.
Oh, they'll happily tell you how you'll make money.
Yes. Well, no, I mean, as in like, how is your company going to make money? And therefore, why is this token going to make?
And that's the part that's the part where I see there needs to be an independent, and not to tout Morningstar, but obviously we're founded on independent research, but there needs to be a player in that space that has that independence and that says, well, let's look at these things honestly. If you're promising 25% returns over 5 years, or if you're promising, you'll get 20 million, the whole token will be 40 million and you'll get 20 million as that group of investors guaranteed. Well, how's that going to happen? So one thing I realized is these companies that ICO are happily telling you what your benefits are. But they don't tell you the road to get there.
Exactly.
At least not in the roadshow. And that transparency, I think, through companies like Morningstar, if we were to get into that space, and we are in the equity ratings business, and we're in obviously fixed income funds and ETFs, but we're not in that ICO space. And so I think there's a gap in the market for a company there. It sounds like there might be some developments there as well. But if that happens, where somebody can independently look at these things and make that judgment, well, what is that company's ability to meet that promise? That's the transparency I know is lacking. And I think the transparency comes from the issuer, or the lack of transparency comes from the issuer.
I completely agree. Well, at least if you come list on the Fusang exchange, we will enforce that. Right? Certainly for public listings, we require very similar disclosures to most exchanges. We're going to need quality financials, and we're going to need to understand what exactly are people buying in terms of the legal mechanism, but also in terms of what is this underlying asset. Right?
And that's a good question from my side. In terms of Fusang as an exchange, where is there a regulating body for you as an exchange? Like, do you fall under the same rules as the Hong Kong exchange, or are you enforcing the same rules even though you're not required to follow them?
Well, our stock exchange technically sits in Labuan, which is a jurisdiction of Malaysia. And as an exchange, we are the self-regulating body. So it's up to us to set those rules. And we view it as our single mission to run a clean and regulated marketplace, right? At the end of the day, a exchange is buyers and sellers coming to meet. And that's our sole job. And I think part of the reason in the digital asset world, or part of the issue, is that sometimes people play a lot of different roles. right? On one transaction, you are acting as sponsor, broker, you've originated the deal, you're trying to sell it to investors. All of these IEOs, these initial exchange offerings that I see are just, conflict up the wazoo. Whereas for us, we say, look, we cannot act as broker. We do not help you place shares in any way. You need to apply to us to get listed. We are the marketplace, right? We are supposed to be regulating you. And I guess in a broader sense, my overarching belief in the whole digital asset space is that the structure of the financial industry is not about to change. Not least of which because regulators are not about to change their requirements. So you will always need brokers and fund administrators and custodians and exchanges and banks. It's just that with new technology, who plays those roles may be different. Yeah. But I don't think that the roles themselves are going away anytime soon. Just like I don't think the concept of a share or bond issuances or a fund is going away anytime soon. These are well understood instruments. And I think that there's already massive benefit to just taking a paper-based instrument and digitizing them. But to me, it's just a very thin technology layer. And the end user should not need to care if it's paper or digital. Right. They should be asking the same questions, right?
Absolutely.
And saying, what am I, I'm putting my money into a business or a project in some way. What am I getting, right? If this were a traditional paper-based offline business, would I be putting my money into it? Right? If the answer is no, the fact that you've got a magical digital token should not change anything.
That's exactly right. And I think circling back to the Fatburger example, that's something that they wanted to make clear.
Yes.
Our analysts is that we rate the underlying company, its ability to pay, the use of the proceeds.
Yes.
And so that part doesn't change, right? So that's what they look at. They look at that company, and is that company, is that going to be a good investment for the investor in that bond? And I think if you asked yourself that question, and the answer is yes.
Yes.
Yep. So that's one hurdle cleared.
Yes.
I think the other hurdle is, and it will go through the entire ecosystem. Can they trust the custodian when they invest in the digital share?
Yes.
Is that share safe in the custodian environment?
Yes.
Will they be able to sell it when they want to sell it? And all those, the investor will have to be educated on that, on those steps. So I think one is getting them to understand that it's the same investment. It's just in a digital environment.
Yeah. And
then the second is giving them confidence in the system.
Yes, absolutely. Yeah. And we've got a few minutes left, and maybe that brings me to my last question, which is, everyone always talks about waiting for institutional money to enter the digital asset space. Do you think ratings are sort of the one key? If we start to have independent ratings of underlying companies of the assets, is that enough for institutions, or are they waiting for more? Is there something else that's blocking entry?
Well, I think it's one key. I don't think it's the only key, because not every instrument gets rated. Anyways, so I think it's, if the ratings company the company that provides that ratings is trusted in that environment, then I think that's okay. That provides that security. What I think will drive the institutional money into that space is probably if they have some sort of hand in it. Now, it could be the retail investor as well, pushing back to these broad-based asset managers, wealth advisors, that they want to be in the digital space, right? They want this all. Why am I getting paper statements? Why am I getting my proxy votes and all of this? So that could be the driver as well. Back. But I think once the ecosystem is set up, and then as we talked about earlier, everything being on AWS, once the technology can handle that volume, I'm not sure the technology is there yet to handle everyone switching over. Then you'll start to see institutional money come. But I think some of those companies are leading the way. So I think if you look at some of the bigger firms are probably going to start making investments in the space. And that will tell you where they're going. So when they start acquiring companies or partnering with companies that are in this space, of the securitization side, on the digital custodian side, then that will be an indicator that they're willing to go into that space. I think Jamie Dimon famously said, no one will ever trade Bitcoin.
Yes.
And now there's a Bitcoin team, right?
Absolutely.
So I think there's, it's definitely going that way.
Yes, no, absolutely. Well, I think that's perfect timing. We've just about come up to our half an hour. No, thank you very much for coming.
Well, thanks for having me.
I think, Fusang is completely aligned with what you say, and I think that for this whole digital asset space to really become what I think is the inevitable future, but to help usher that along, we need transparency, but as you said, we also need people in this space, I think, to take a bit more responsibility.
Oh,
right?
totally.
We need issuers to say, hey, okay, right, I do want to get rated because I think this would be useful for my investors. And I think we also need the intermediaries, the institutions in this place, I guess, including people like ourselves, the exchanges, to pay a lot more attention to these sort of things, as opposed to just kind of focusing on the short-term win too, right? Get rich quick on all sides right now.
I would say you enforcing exchange rules for the companies that list to create a clean environment. So if every company on your exchange that comes forward has gone through that rigorous program where we understand what that is and we can trust that, that's a great first step. And that, the fact that it's happening here in Asia, I think is amazing. And I think that will really bring that market along. And it's just,
working on
every mile takes, starts with the first step. So absolutely. And congratulations and well done.
Thank you very much.
Thank you.
No, well, thanks a lot for coming on. It was great chatting to you. And thanks.
Awesome. Thanks for having me.
All right. Thank you, everybody.
Cheers.
Take care.